Hey guys, Dave Keller here with Market Misbehavior. Today we're going to talk about one stock, Microsoft, and while it is just one stock among many, it's an important one because it has an important impact on the key ETFs and also the broader market as a whole. So earlier this week, I tweeted out that, what are the chances that the S&P and the Nasdaq can rally when stocks like Microsoft are making new lows? And I gave you three choices: 0, 0, or very much 0. And that was meant to illustrate the point I'm going to show with you today. A stock like Microsoft is just one name among many, right? So is it the end of the world if Microsoft is going down? Of course not. There are names that are working just fine. Look at energy stocks, look at renewable energy stocks, things like solar names, look at some healthcare stocks, breaking out to the upside. There are plenty of things that look very different than Microsoft. But here's the thing. Microsoft is such a big name with such a big weighting in key ETFs like the XLK and the Qs that if Microsoft is struggling, it really speaks to the broader economic weakness, or at least the broader market weakness that is expressed in the form of a stock making new lows. We're going to look at the charts here in a second. Before we do, if you like this thinking about investor decision-making and technical analysis, I would love if you'd subscribe to my channel. It'd be great to have you along this ride. Also, give the video a like if you appreciate it. We'd very much appreciate that back. Finally, put a comment below. What do you see as a downside target for Microsoft? Let me know in the comments. Let's get to the charts. Okay, so here we're looking at my basic daily chart of Microsoft. It's a 2-year daily chart, and all of my daily charts, all of my sort of basic charts look very, very similar. And if you follow this channel, if you follow my work on StockCharts, this is my basic go-to chart. When someone asks me about an equity and I just want to get a sense of where it's at, where it's coming from, and get a sense of where it's headed, this is where I start with. It's a 2-year daily bar chart. And then the 50-day and 200-day simple moving averages, the RSI next down at the very bottom, relative strength. So we've talked a lot on different videos on this channel about different forms of technical analysis, thinking about price versus moving averages, momentum, relative strength, all these different components. But I want to talk today about is why it's important to connect what you see with an individual stock like Microsoft with the broader economic environment, with the broader market picture. Because I found a lot of individual investors focus a ton of their time on the indexes, right? On the S&P, the Nasdaq, the Russell maybe. And listen, that's totally valid. I pay a good amount of attention to those as well. But what I found from institutional investors, particularly equity investors, we spend way more of our time looking at individual stocks. And if I had a choice of look at the S&P or look at a bunch of individual stocks, I'd much rather look at the individual names because they can often identify opportunities before they're reflected in the broader indexes. I think you get a much better sense of leadership and the breadth behind market moves when you're looking at a bunch of individual names. And at the end of the day, you don't need to look at a chart of the S&P to know what is likely happening if you look at a bunch of those individual stocks, particularly key mega cap stocks like Microsoft. And that gets me to today's chart. Microsoft is one of the largest companies in the US, certainly one of the largest technology companies. It's second behind Apple in weighting in terms of things like the XLK, the technology ETF, and the Nasdaq 100 ETF, the Qs. 1.7 trillion market cap, so certainly a mega cap name. So what does the price tell you? So first off, Charles Dow, Basic Charting 101 is a way of defining the trend. You look at the highs and you look at the lows. Are the highs going higher? Are the lows going lower? Make that basic assumption. Now, we have indicators like things called a zigzag indicator, which actually attempt to automate that analysis. I would argue you don't really need it, but if you're struggling to kind of follow what I'm saying, there's an indicator on StockCharts called zigzag, which basically just looks at a percent move. So every 5% swing, it puts a new node on that chart. And so you basically look on whether the highs are getting higher or lower, right? So in 2021, you can see a pattern of higher highs and a pattern of higher lows. In 2022, you can see very much the opposite, really starting in November of last year, lower lows and lower highs, with random exceptions like the swing higher in July and August certainly changed this and had a very bullish potential there for quite some time until Microsoft, the S&P, a lot of individual names as well, hit resistance at the 200-day and reverted back lower. I'm going to take that right back off. There we go. So what's the analysis of this chart? Well, I mean, my first comment would be it's making a new 52-week low, and it's doing that, this week, right? Yesterday, it actually made a new intraday low. Today, not quite as much, but very, very close, similar close, similar low to yesterday. So really, Tuesday session this week was the new 52-week low. so far. New low for 2022, obviously, as well. You can see that the RSI is in the negative range, so it's well below 50, sort of remaining below 50 for most of the time. When we rally, it's rarely getting much above 60, and that whole idea is a sign of a bearish trend. And it's underperforming. Look, the general slope of the relative strength line is down with some moments where it's sort of reverting back to the upside. But that tells you over time, since last November, owning Microsoft means you're underperforming the S&P, not by a ton, but by a noticeable amount. So what does it mean when Microsoft is making a new low? Well, what I would say is it is impossible, right? There's literally, I would argue, a 0% chance that something like the S&P 500 has any chance of moving higher, to say nothing of the Nasdaq Composite or more of a technology-oriented benchmark. There's no chance of those benchmarks to go higher in a meaningful way when Microsoft is going down. And the reason is because of the weighting. If you look at the Qs, the Nasdaq 100, Microsoft makes up about 10% of the Qs. Apple's a little bit more. It's probably about 12%, 14, 15% maybe at most. And then Microsoft is second, about 10 or 11% of the weighting, which means that one stock is a 10% weighting in the ETF. If you look at the XLK, which is a technology ETF, right, the technology sector spider, it's even more. So I think Microsoft's about 20, 22% of the XLK. Apple's probably another 40, 42, 44%. So I would say, 20, 22% or so. So I would say between the two of those, between Apple and Microsoft, those two stocks together are about 45% of the ETF. So it's a challenge with some of those sector ETFs that they're actually very top heavy, right? So the XLY, which is consumer discretionary, you have Tesla, Home Depot, and Amazon that are about half of the ETF, just those three stocks. And then with the XLK, two names are almost half of the ETF as well. So the challenge again is when Microsoft and Apple are struggling, what are the chances that the XLK is going to go up? I would say minimal. What are the chances that the Nasdaq 100 is going to go up? I would say minimal. What are the chances the S&P is going to go up? I would say minimal, not just because of Microsoft, but because what Microsoft represents. It's highly unlikely that Microsoft's going down and all the other technology and communications names are thriving. Chances are it's more of a broader movement away from the growthy sectors like technology. Our benchmarks are so technology and in particular growth oriented. As a result, if that sector is struggling, if those types of names are struggling, it's going to be pretty tough. Energy, for example, I think it's only about 10% of the S&P 500. If you look back in history, there are times when energy was 20, 30, 40% of the S&P 500 in terms of market cap. So talk about a complete change, which means energy stocks can thrive, technology stocks can struggle. The benchmarks are going to be relatively muted, even though certain areas of the market, like energy, materials, industrials, could actually be doing fine. And you wouldn't know that by looking at our major benchmarks. So we've established that Microsoft is down just based on the pure analysis that it keeps making new lows. And so that's bearish, right? The market going up is bullish, market going down is bearish. I think that is absolutely true. Just look at the price relative to the 200-day moving average, by the way, and you can see a beautiful illustration of the rotation from an accumulation phase in 2021 to more of a distribution phase in 2022. And just look at these failures in attempts to eclipse the 200-day moving average, all being repelled, all making new lows. So what's next for Microsoft? Is there any hope for Microsoft? And as a result, is there any hope for the broader markets? There's always hope, and that's the reality. If we back the chart up a little bit more, now we're going back to the March 2020 low. Now, what's interesting about Microsoft is if you look at a lot of other stocks, right, they reached their 2020 high a little bit later, maybe in the fall, and then have moved higher, but not significantly higher. Microsoft actually was one of the early names to get to a new all-time high. It actually happened in June of 2020, not too long after the March low. From there, 2020. From there, it's just really continued on and moved higher and higher. Now, if we take a Fibonacci analysis, March 2020 low, November 2021 high, 38.2% of the way is around 264. That was the low from March of this year and April of this year. I'm rounding about. Also served as a resistance here in May and June of this year, by the way. The 50% line is right where we got to about here in June. The June low is right about a 50% retracement of that move. Now that we've broken down through that, I'm eyeing the 61.8% retracement, which is just above 210. It's around 212, 213, not too far below current levels. So is there a scenario where Microsoft gets a little bit lower, hits that area of support, which, by the way, lines up really well with this consolidation area in the fourth quarter of 2020? Is there a chance that we get there? and then bounce higher from there in a significant way? Absolutely, that is 100% possible. I would also keep an eye on the momentum characteristics, right? So the RSI was oversold here when we made a new 52-week low in September. But we've made a new low so far in October, but the RSI is not yet making a new low, right? So you're seeing lower price, but so far not on lower momentum. It's a little early to declare that a bullish momentum divergence. You'd have to wait for the price to bounce higher, but it does tell me it's something to look at, something I have keeping my eye on for sure, particularly this week as Microsoft is making a new 52-week low yet again. So what's interesting is if you look at the S&P 500 chart, 61.8% of the way down would take it down to 3,200. And that's quite a bit further down on the S&P chart than what you see here on the chart of Microsoft, which means there's a scenario where Microsoft moves a little bit lower. Those mega cap tech names move a little bit lower, find some support at a key Fibonacci level, start to rally. If so, maybe the S&P does not get all the way down to 3,200. Maybe you get some strength lining up with the seasonal tendencies of the market to rally in November and December coming out of an October low. And we have a potential to rally through year end. All of that is possible. I would argue most important is the chart. Forget what you think may happen. Focus on what is happening. That's why the chart of Microsoft is key right about now. So there we go. That's a quick analysis of the chart of Microsoft, talking about the established downtrend, the fact the momentum has been relatively weak, but signs of optimism, right? We're approaching a key Fibonacci level. The momentum characteristics, the RSI potentially starting to look a little more constructive. It's all about the price, though. And if anything else, if nothing else, I would focus on the price of Microsoft and see what that happens. If you can get a bottom in a chart like Microsoft, if you can get a rally and ideally a higher low and a rotation in momentum, then and only then do I think you can make an argument that the major benchmarks have a real opportunity to move higher through year end. That's it for now. This is Dave Keller with Market Misbehavior. Be well, be safe. Talk to you soon.